The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. Well, a lot of things happening here at the old Duke and Duke offices here in Philadelphia. Folks, I posted a chart for the DAX and also for the FTSE, but that's not the important one today, folks. The important chart today is the one on the grains. I put this up here because we're going to be able to relive the old a la mode, or is it deja vu, something like that. It's the deja vu, of course, but we are going to be able to look at something that we don't see very, very often. You'll notice on these charts of wheat, corn, and soybeans, these are huge moves, folks. 30 cents in beans, 25 cents in wheat, 20 cents in corn. Those are just really, really big moves. However, let's go back in time to 1975, and I'm going to try to tell you the type of report this is, and that Rich Anderson will be our guest at 9:30 to explain to you what we're really looking at here. But let me move over here to 1975, 1976. I'll get these charts up so you can take a look at it. And this is what we're going to try to do, is to use market information to see if the market is doing what we think. Now, you'll notice there the red arrow on the bottom at 1975. If you'll look closely, that the high that was made back in late 1969 to 1975, you'll see that big Gartley pattern that was there. That's what got me interested in this. And I was working for myself. Now I had been out on my own. I hadn't broke the ties yet with Eli Lilly. This was in about a month or two of that. But I had been studying for about a year, and I started to tell folks about this pattern. And I was working through Conti Commodities there in Westwood in Los Angeles, across from UCLA. And what I was doing is listening to Dave Nelson and Oscar McClure, who were two soybean traders there. They were good friends with Jim Sibbett and Earl Haddady, that guys that started the opening price, and they had a commodity trading firm, or not trading firm, but a research firm, along with Dave Nelson with market research. So they were looking at all the soybean fundamentals and stuff, and this is the ones that got me interested. But that Gartley pattern is one that really got me started doing this. The reason why I'm telling you this, folks, I've told it before, but to me, it's the most, this was life-changing for me. I mean, really big-time life-changing, because I was able to leave Eli Lilly, and then 2 months after this was over, I was back in working for Drexel Burnham for the next 6 years, and been doing it ever. David White's asking how how the call with Joe DiNapoli went. It went very well. We had a great talk. We hadn't talked in over 10 years, actually, and he's going to be our guest very soon. He's got some things he'd like to share with us, but he's doing okay. But we had a very nice chat, and we'll get into that later. But let's get back to where we were here. This was started in December, right around Christmas time, 1975. They got me interested in these oil contracts, soybean oil contracts, and soybean contracts. And I was working at Lilly, but I had a lot of contacts that had opened accounts at Conti Commodity, and so this looked like a really good deal. So anybody that would listen to me, I tried to give them the story. I couldn't tell them what a Gartley was, because they wouldn't understand that. But I tried to show them what supply demand was and what possibly could have happened, because the old highs in beans were up at they're showing here at about 11.90, but actually they got to 12 and change back in 1969. So I said there was a great potential here. But the good part of this, folks, is the amount of money that you had to put up at this time. You could buy a $6,000 contract for $180. Now, remember, this is 1975. That's when the CFTC first started opening business. So, there was very little regulation on this stuff. So the margins were extremely small because, the prices were very, very low. They had gone down from $11.99 down to $4.50. And per bushel. And so that's what I had started doing. And everybody would listen to me. I'd say, do this. And we were opening up through our broker. We were using Bob Shattuck. And Bob retired after this movie. He was finished. Anyway, the market started to get up. I'm trying to get to a point of why all this happened and what's related to this report right now. Well, the market started to go up a little bit, 2 or 3 pennies, which is like $6 a day. And when you're in it for $180, $6 is nothing. But on one Friday, we were long long July oil for 1976 and short December oil for 1976. We were doing we were out about 4 months. And we were long July and short December. At the end of the day, right on the close, July oil jumped up 30 points, which was $180, your total margin, and your December dropped 180 points, which was another, so $360. You made 200% on your money on the close that day. And boy, the Reuters machines were going crazy about the big aberration that occurred in the soybean oil, and that was going to be corrected on Monday morning. This was going to be a foregone conclusion that this thing just doesn't happen that way. Well, Monday morning came and went, and by golly, when the markets opened, they opened flat. And they kept that $360, and so I didn't give anything back. I'm saying, wow, how could that happen? Well, folks, for the next 18 days, that happened every day. And those spreads went absolutely crazy. And the soybeans went crazy. And here's where we come up to the punchline. There in 1976, it was June of 1976. And on Friday, they issued a report that just blew the socks off the soybean market. In fact, I wish I had kept this because I read it on Reuters. I had the yellow paper right in front of me, and it said that the only soybeans that are going to be available, folks, are the ones you'll be able to find in the Smithsonian Institute. And I said, oh, my God. And so all weekend long, I'm thinking about what am I going to do? What am I going to do? What am I going to do? So I come in Monday morning, and the opening calls are 3 limits minimum up in oil, beans, meal, oil, wheat, corn, everything was going to be up the limit 3 days. Yeah, well, that was early in the morning, 2 hours before it. So I said, well, that looks pretty good. And then about an hour and a half before the opening, I got a little nervous and I started writing orders to put my stops 1 tick below unchanged. In other words, if that market didn't open limit up, I was out. And that's what I started to do. And I just started writing and writing and writing. I had over 1,200 contracts on during that time. And then finally, what happened, I think we got a break coming up here. I want to finish this story because it's a little emotional for me because it was life-changing for me because it got me back into the game. And then shortly after that, I was hired by Drexel Burnham, to run their commodity department, which I did for 6 years. But I want to cover the last part of this story here when we get back from the grave. Oh my God! When we get back from the break, and we'll finish up and talk about that. But we will have Rich Anderson on explaining, what the report actually was. So let's try to keep that in mind.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to finish the story here about the soybean market of 1976. It was June, and the report came out on Friday, and it basically said there were very few soybeans out there, and there was going to be big problems coming up. And this is where we stood. The early morning calls on the squawk box from Continental Grain, Conti Commodity, were saying that they would be up the limit at least 3 days and probably 5 days limit up, which we've seen that before during 1969, but this was a little different because we're now 7 years beyond that. The first indication about an hour and a half before the opening was 2 to 3 limits higher, and then about a half hour before the opening, solid 1 limit higher, 2 limits higher, and all the nearbys. The far out options would be probably limit up, but there might be some trading. 15 minutes before they came to the market, he said there's some selling showing up in the back end months. He says they're off limit just a little bit, but we're solid limit here, the first 3 contracts. He said July through September, he said, are all lock limit up really tight. And then about 5 minutes before the opening, he said there's some selling coming into these markets, folks. He said they're not going to be limit up. He said they're going to be sharply higher, but he said, we don't see any limit bids up here anymore. There's selling coming in. And then about 1 minute before the market, get a little emotional here. About 1 minute before Ivan Hour was on, he said, oh, my God, Jesus Christ. He said they're going to open unchanged, and they opened 1 cent higher. And as you can see by that 1976, they were limit down 4 days in a row. Now, I look at this chart now, and I say, why in the hell didn't I go short there? because there was market indication that something was not right. You had the most bullish news in the world, and that thing couldn't go higher. And folks, when you see that, you're in big trouble. And that's what we're going to be talking about, because if you look at these charts, and we're going to go through these with Rich. Let's just take a look here. First one, we'll do wheat first. You can see here, this is the wheat. This is up to date. This is this morning where we are. You'll notice here that we haven't taken out yesterday's high yet. That was, you can see that was at 587. We're 10 cents lower than that. You can see the 3 drive to a top pattern there. I mean, it's as clear as bell. You got the most bullish news since Hector was a pup, and that dog's 9 years old already. So that's the wheat market. Now let's just take a look. You can change this to stocks or whatever you want, because it's all related to the news. So let's take a look at the corn. Here's the corn market. Now, corn came up and made new highs. I don't know if you guys enjoy this or not, but by golly, this brings a lot of memories back. Now, you can see we made new highs in the corn, and we're actually trading about a half a penny or a penny higher than we were yesterday. So that's actually continued on. And then finally, if we take a look here at the soybeans, you'll see what the soybeans did is all they did was go up and make a 78% retracement of the 8-day drop that stopped at the 382 level. I mean, that's really what we're going. Now, yesterday, believe it or not, I didn't have any data most of the day. Well, up until late afternoon, I didn't have any data. I had some problems, but we finally got it done. Okay, now Ruby's asking a question here. Is it true that professionals do not trade their own money, only other people's money? It varies. A lot of them, do, and others don't. At Drexel, we were not allowed to. We were not allowed to do that. We had to do everything, for the customers. We were not able to do that. But, you were making a lot of money, so it didn't really make a whole lot of difference. But anyway, that's what happened. Shortly thereafter, I had closed everything out, and we did really good, and that was it. I mean, that next day on Tuesday morning, I went into Eli Lilly and I retired, and just about 2 months later, Drexel asked me to come in and run their commodity department, which I did. But this was a really momentous day, and this is the type of report that we got, folks. I mean, you'll listen to Rich today, but this really scared a lot of people. You can see by the move we had in the intraday. Now, maybe here's where they were this morning, and with yesterday's range in, you'll be able to see that it was quite substantial. But back in the old days, these things would have been limit bid, right away. So we've been in such bear markets for so long with these things for the last couple of years, nobody's really looking at it. So the key that you have to watch now is you've got to get it a day or two, because you've got 3 drive to a top patterns forming in both soybeans and in wheat, and corn has just went above it a little bit, but this has got some really good opportunities in here, because if these things don't go up on news like this, they're not going up, because it's really, really bullish. And then on top of that, you've got this weather problem that's going on in China. They're still flooded over there, and they're still buying, the beans and stuff hand over fist. So this is a place where you take a situation and look at what the market is trying to tell you. In other words, how many buyers are selling coming in. Because if you're a technician, we're going to listen to Rich, what he has to say. I didn't read any of that stuff he sent me, because I don't understand a lot of it. All I understand is those bar charts. But when he tries to tell you that things can't go any lower, or they're going to go higher, who knows? We'll see. Peak is saying if soybeans stop $18, well, that was 5-6 years ago, but those types of move happen. And remember, folks, the soybeans have an inelastic demand. This was one of the things that Paul Samuelson used to talk to us when we were at graduate school at Indiana. He was saying if you learn more about trading a contract to soybeans than you will in 2 years of a business school, because it tells you about margins and supply, demand, and all that other stuff. My view on copper here is I don't really have a view, Zip, but I will do it for you. Since we have a second here, I've got most of this stuff covered. I want to get this thing moving here 1 second here, and we'll get this chart up for the old copper, and then we'll be okay, I think. Here we are, Mr. Copper. Let's just Let's get the daily up here. I haven't traded this in a long time. Given the fact that we're looking at right now, it looks like it's ready to make a really nice ABCD to the downside. I'll blow it up so you'll be able to see it. But to me, it's very clear, actually, that we got a lot of support down about 12 cents lower in copper. That's what I would be looking at. Crude, we're still bearish crude, folks. All we did yesterday in crude was to make a perfect 78% retracement. Let's get this up here. You'll be able to see that. And, we'll be able to see what we're going on here. Let's get the crude oil up here 1 second. Just a second here. Get this up here. There we go. You'll be able to see the 78% retracement in the crude oil, and we're heading down to taking a look at that. Rich, let's see, Mr. Z, talk to Rich, assessment of supply demand. Come on, Rich. When Rich comes on, why don't you call in, John? We'd love to talk to you. Please do. So that's what we're watching. But anyway, the crude oil made a 78% retracement level, and now we're still heading down. We focused on that in the newsletter quite a bit, folks, because of that, that 618 at $44 a barrel was very, very important.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line this morning. Rich, are you there?
Yep. Good morning,
Rich,
Larry.
good morning to you, my friend. We were just going through the old walking down memory lane here today at the market with Willard Sparks back in 1976 when you and I first became friends, I think in around 73 or 74, and I was telling him what happened about that report that was so bullish. They were supposed to be up 3 or 4 limits in a row. They opened basically unchanged and went down 5 limits. We're in a bear market for just over 2 years now. We had this report yesterday. I showed the folks that we had these big moves in the soybeans, wheat, and corn yesterday. And if this report is as bullish as it should, wouldn't you expect more continuation, Rich?
Oh, well, absolutely. But here's the thing, Larry. We're in the middle of harvest. Normally there's not a surprise in the middle of harvest. The activity yesterday caught everybody by surprise because they're all waiting to buy the harvest low. All these end users of meal, corn, wheat. So I totally agree with you. And the line in the sand is yesterday's highs. If we close above yesterday's highs, they're going to still light them up. But these buyers that are planning to buy during the harvest lows, they're still going to be there. So if there are any dips, they'll be trying to buy that. But I consider yesterday's highs is the critical thing. You saw the market sell off from their highs. There was a lot of corn and beans being sold. You know, the farmers are combining right now, and you're selling the beans right off the combine, selling the corn. So there was a lot of cash moving, and that kept a slight amount of lid on the market. But keep in mind, next Friday is the supply and demand report. You know, the stocks report, they came with a curveball of immense proportion in the corn, 250 million bushel change roughly. And when asked how they had done it, they had revised the June report by 205 million. They said it was, just an administrative review. I mean, so this caught a lot of people off guard, and now they've got to scramble. The end users have to scramble. But the farmers are harvesting their crop, and these great prices, they're selling some of it because they don't have room to store it all anyway. So that's what you saw yesterday. But if we close above yesterday's highs, I think there's more. And keep in mind that next Friday's stocks report telling us what our yields are and what they anticipate our crop is going to be. That's where you normally will get a surprise, and they're expecting there could be more demand because of China. You probably pencil in more of that. And frankly, we've had some dry weather and stuff like that, so you may reduce the production. They're talking about the beans right now. The USDA has them having the record yield just like they had in 15-16. 15-16, the good to excellent rating of soybeans was 74%. This year it's 64%. Maybe they did revise that yield number down. I mean, I don't think there's going to be too brave of a seller before next Friday because A, they're caught off guard, and B, they could get exposed with another surprise next Friday.
So this has game-changing possibilities, doesn't it?
Yeah. This has long-term implications. I was talking with Rick yesterday, and we were looking at previous analog years, and this deal I anticipate will be with us for the next 6 to 7 months minimum, because it's changed. We've gone from 2.5 billion to under 2 billion, and now we've got a crop report next Friday where they're talking about this year's yields, and they may A, reduce this year's yield, and B, increase demand because of China. So it's a game changer. Trade what you see. Be intelligent about structuring your risk when you put trades on. and it's impossible to be intelligent about structuring your risk right in front of a report. So next Friday, unless you got a big lead, you got to be a little careful.
Yeah, Rich, a few months ago when the hogs were down around under 50 cents, you were quite bullish on those hogs, along with Mr. Z in the room here at TFNN. And now we've got the hogs up around 65 cents. We're up about 15 cents from those, well, actually 20 cents from those lows. What do you see in the hogs? Are the China still in the market for them?
Well, China's in the market for them. Probably for the next, let's call it through the election, or I mean through the Olympics. You know, they're repopulating 300 million hogs, and I think they have Olympics in 2022. They're going to want everything to be real happy and plentiful. I expect that there'll be good demand, but what the kicker in the demand in the hogs has been is the Asian swine flu in Germany, you know, had China, Korea, and several other countries stop buying from them, and then that means they got to buy it from somebody else. They don't, you know, they're still going to buy pork. They're just going to buy it someplace else, and that brought it here, and I think that's going to continue for the next several months. So I think hogs will be well supported. Normally we have a dip into the end of the year in the hog market, but, you know, the December's already, a $12 discount or something to cash?
Yeah, no, it's moving pretty good. I noticed that one of the things you sent me this morning, and we're talking about this report, and the beans was so shocking that they're actually worried about whether Brazil can make up the difference if things get bad. Is that true?
Yes, but also Brazil and Argentina, the central part of those two countries, have been having temperatures 15 to 20 to 5 degrees above normal, and it's dry down there. The La Nina is definitely kicking in. It's dry in Russia and the Ukraine, so you've got to be looking at the Black Sea area of wheat production, and all these things coming together at the same time, it makes it kind of unusual. I mean, yesterday wheat closed the highest it's closed since, January 22nd of this year, and the corn since March 4th. And the wheat stocks we're talking about being the lowest inventory since 2015. And Brazil needs to, they need to grow a good crop of beans, and especially if we get another surprise next week and the yields aren't quite as good as the USDA had previously been projecting. They have had a bad summer, the USDA has. I mean, keep in mind, back in June, they projected all this corn, and that didn't work out too well for them.
Yeah. Rich, we have a question for Mr. Z in the room, and that is, do you see any influencing of the synthetic meat business on, the hogs and pigs, hogs and cattle?
I think it probably has more implications for the cattle than the hogs, but that's the direction we're going, especially with the millennials. But they won't be able to produce enough beans edible beans to increase that dramatically overnight.
Hey, can you stay with us through the break? We got a couple other questions.
Sure, absolutely.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're chatting with Rich Anderson, and we were chatting about the synthetic meats. Rich, have you ever tried any of that stuff?
A year ago in Detroit in the summer, I tried some meatballs when I was with the International Agri Group. And frankly, they didn't taste too bad. Yeah, I mean, you really almost couldn't tell that they weren't meat. I was surprised, but you know, they also have a lot of chemicals in it, and so there are trade-offs here. But the millennials have the idea that this is a way to eat healthier. Well, it isn't necessarily so if you look at all the ingredients, particularly the chemicals, and then, you know, we'd have to really ramp up the production of our edible beans in order to make unlimited supplies of the synthetic hamburgers, and that's going to take time. Mm-hmm. Those markets, the producers have to develop those markets, because if you grow those in an area where there's no buyers, then you have nobody to sell to.
Yeah.
Or you'd have to truck them so far, it takes time.
Yeah. Any chance in the future of seeing Soylent Green?
to see what?
Soylent Green. Remember the movie with Charlton Heston?
Yeah.
That's mostly folks don't remember what that was, but I don't think that'll ever happen. But it's really crazy when they start talking about food supply and stuff. Rich, Byron spoke to me last night because he used to work for Cargill back when he first got out of grad school before he went to work for Leo, and he had a research project once that this was in 1942 in India. There was a perceived crop failure in rice. And the people in India bid up the price of rice so much that it caused a famine that killed like 4 or 5 million people and lasted for like 2 years. I mean, that's what can happen to some of these things, because if people think that they really want to, clamor for gold, boy, remember that, gold is indigestible and people certainly want to eat. And if food ever becomes a really hot commodity, as we've seen in some of these markets before, they can literally go crazy to the upside. Remember sugar at 66 cents?
Absolutely. Yeah. And the big fear right now is that this is going to be the great grain robbery, too. 1974, when the Russians bought all that grain, and nobody knew about it, and the prices went straight up. Well, they're afraid that, the Chinese need all this grain, and the prices have been awfully cheap, and it's going to be robbery number 2. And by the time we figure it out, the price will be a lot higher.
Well, I think the message is in the sand right now, because if we start trending higher, that's going to be an indication that this thing is for real, then, isn't it?
Yep. So
yeah, well, that's what I'll be
if they've
watching.
got traders
for sure.
willing to keep their money on the table above yesterday's highs, that tells you there's something up. And I think the shorts are going to be reluctant to press the market down before next Friday's report. So I kind of lean towards the bulls trying to be able to push it. The farmers will continue to be sellers, but they're not going to be big sellers that would push this thing down. They're just, they're selling as it comes off the combine.
Yeah, wow, that's really cool. Listen, I know you got to get going because you're busy in the morning, but thanks for joining us and appreciate these stuff. And keep me informed of what's going on, Rich, and I'll share it with our folks here, because we do watch these grains, and we're going to be watching them very, very closely now that we've got an outlier event that could really mean some big things here. So be safe over there. By the way, how's the police situation in Minneapolis? Do you still have one?
We still have them. We don't have enough of them, and they don't get the respect they deserve, and it's a tough job, and they just don't get the respect they deserve. That's all there is to it. You can't paint the brush over everybody based on what one person may or may not do.
You got it, brother. Listen, thanks a lot for joining us, Rich, and be safe, okay?
You bet. Thanks, Larry. Bye-bye.
You bet. Rich Anderson, Anderson Capital Management. Let's move on here a little bit here. We've had a little bit of action here in the S&P. We went down for 17 cents. We rallied up 16 cents, and now we're back down near the lows. We've got a high probability of being a down day today, folks, just with the fact that we've had so many up days in a row. But we're still substantially higher on the day. We'll have to get below 33.55 in order to get the market, moving to the downside. So that's another one that we want to pay close attention to. Now, those of you that follow the gold market, we had a very strong rally here. We got up to 19.15, folks. Remember, the low was 18.52. We rallied $62. That's twice the harmonic number. We then backed off $11. That was exactly at the 382 at 19.05. As long as we stay above 19.05, this has a potential to have a very, very strong day, but we've rallied up to 1912 and we're already back to 1907. So, it's not as bullish as you'd like to see it. But the fact that 382 did hold at 1905 is very, very important if you're long the gold, because that means it still has legs. But the key thing to watch today in the gold is in about a half an hour, because if we're not higher than where we are right now in a half an hour, that is not going to be bullish. In other words, the momentum on the gold would start to be fading because it's not moving at the same rate that it was before. And that's just looking at market statistics, folks. That's nothing about fundamentals. It's just how quickly the market is moving in one direction or the other. Another market that we need to watch closely is the Treasury bond market. We're trading about 175.20. If you remember yesterday, we said to watch that level at 175.16. Well, we went down to 175.08 this morning, and we're now trading at 175.19. As long as we can stay above 175, it still has a chance. But if we happen to go below 175 in the December Treasury bonds, folks, you're going to be looking at something that's not very pretty, because you'll be breaking down below. There's some support. Of course, the 175 level is the level that was hit back on September the 10th, and today's low was 75.08, so it's in 8 pips of that. But if we get below that, you'll be looking at 173 in the Treasury bonds. And remember, we hit a 181. We'll be down 8 handles from the time when the Fed dropped we're on the interest rate thing, when they came out with their minutes and stuff. So this market's not acting like interest rates are going to go higher. It's acting like, or lower. It's acting like interest rates are going to go higher. So pay attention to those bonds. Below 175 sets up about a 171 to 169, because it could really scare a lot of people. And who knows? Maybe the Fed's changed their mind and hasn't told us yet. We're always the last one to know anyway. That's for sure. So let's remind ourselves of that. So lot of stuff happening. Of course, we got tomorrow is Friday. I think we got a jobs report tomorrow too that'll probably do it. Plus, we've got these other things that are going on in Congress. So there's always going to be some new things happening. But we'll do one at a time. Right now, we really need to focus on these grains here over the next day or two, probably the next week or two, to see how they handle this news, because it was a big thing in the grains that we saw today. That would be equivalent to see a double discount rate cut or something like that. That's how big it really was. We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to share with you a chart here of gold. This is over the past year. Now, most of you know that I'm up a lot during the middle of the night sending stuff out. And I actually sent out the chart for December 2019, thinking it was December 2020. Well, one of our creative friends across the pond over there started to look to see what happened. And you can see those little red marks line up where highs and lows were of the gold chart. In other words, there were quite a few instances where the actual trading day was a turn from the previous year. Now, that's probably cycle related, but I had never done anything like that. But but it is really a very interesting one to look at. And today is a potential change in trend day in the gold market based on this statistic. So I don't know what that means, but by golly, it must mean something. Now, I do want to share with you one other that we've been fortunate enough to be in and did pretty good, and that's in that U.S. dollar. We've been, short the euro. It's been doing quite well for us. Take a look up here. You'll be able to see this is the U.S. dollar index. You'll notice that we've completed the ABCD pattern up here. We made the very, very nice retracement here. You see that? That means the euro had a little bit of a rally, 3 days. It's gone nowhere. So we're at the moment of truth here. It should start to go back up, the U.S. dollar, and the euro starting to come down. And that has a potential to be a really big move. But folks, if by some stretch of the imagination that U.S. dollar index goes below that 91.50 level, you don't know how many people in the world will be bearish the U.S. dollar, because that thing will really bring a lot of people into the market. So you have to pay attention to that all the time. There could be something dramatic happening. It could be Brexit, non-Brexit, whatever it is. But what you have to be able to do is to say, what we've got to do now is to reverse our position and go long here. But we're a long way from that. I still think we've got a shot at that 115 level in the euro without too much trouble. And we'll see if that's going to have happened. Remember, the Fed is always in these currency markets too, but they can't do much in those currency markets like they have the others because they're too large. The euro is $1 trillion market, folks, and that's why it trades, so nicely as some of the others where you have these wild gyrations. You don't always get that. So anyway, just remember, folks, live every day in an attitude of gratitude, and may God bless. And tomorrow, do I have a guest tomorrow? Yes, we have Shane Smolian tomorrow as our guest. We haven't had him on for over a week, so we're going to